Economics, banking. Commercial banks are the institutions that make short-term loans to the businesses and in the process create money. The statement given by Culbertson. The introduction to banks and banking. Finance is the lifeblood of all economic activities of a country like trade, commerce, agriculture and industry. Bank is generally understood as an institution which provides fundamental financial services such as accepting deposits, lending loans. Banking sector acts as a backbone of modern business world. The banking system significantly contributes for the development of any country. So, by knowing the importance of the banking, the banks determine the financial stability of a country. Banks are highly regulated in most of the countries. Historical development of bank and banking. The private bank established in the year 1656. The oldest central bank in the world is Riksbank of Sweden, which had sprung from private bank established in the year 1656. It acquired the sole right of note issue in the year 1897. So, Riksbank of Sweden, which had sprung from private bank established in the year 1656, is the oldest central bank in the world. So, it acquired the sole right of note issue in the year 1897. But the fundamental of art of banking have been developed by Bank of England in the year 1864 as the first bank of issues. The next one is a large number of central banks were established in the year between 1921 to 1954. A compliance with the resolution passed by the International Finance Conference held at the Brussels in the year 1920. The names of the bank established at that time. The Reserve Bank of the South African Reserve Bank in 1920, the Central Bank of China 1928, Reserve Bank of New Zealand 1934, Reserve Bank of India 1934, the Central Bank of Ceylon 1950 and the Bank of Israel 1954 were established at that time. The history of Indian banks. The history of Indian Bank. The first Bank of India was the Bank of Hindustan in the year 1770 under British rule. The banking system in India was controlled and dominated by Presidency Bank. What is Presidential Bank? The Presidential Bank consists of Bank of Bengal and Bank of Bombay and Bank of Madras. In the year 1921, they all merged to Imperial Bank of India. Then they changed into 1950 as State Bank of India. So, the Presidential Bank 1809 Bank of Bengal, 1840 Bank of Bombay, 1843 Bank of Madras. They all together merged in the year 1921 as Imperial Bank of India. In the year 1955, the Imperial Bank of India changed into State Bank of India. The next one is commercial banks. What are commercial banks? Commercial banks refers to a bank or division of a large bank. The commercial bank specifically deals with deposit and loan services provided by to a corporation or large middle-sized businesses, as opposed to the individual member of the public small businesses. The commercial bank do not provide long-term credit as a liquidity of assets to be maintained. What are commercial banks? Commercial banks refers to the bank or division of large bank. Deals with the deposit and loan services provided to the corporation or large middle-sized businesses, and also as opposed to the individual members of the public or small businesses. They do not provide long-term credit or liquidity assets to be maintained. What are the functions of commercial bank? Commercial banks are the institutions that conduct business with profit motivated. by accepting the public deposits and lending loans for various investment purposes. The functions of the commercial banks are classified into three: primary functions, secondary functions, and other functions. The functions of commercial banks are classified into three: primary functions, secondary functions, and other functions. Subscribe for more videos. Thank you.